Welcome to TradeTheMBI.com. This is John. This report is for the 8th of October. Well, it just keeps getting more interesting. So we've had the buildup that took place as the proposed debt ceiling crisis, which was never a crisis. It was always going to be increased. So that faux drama over. We shot up above the 50%, but closed below it, which I thought was technically significant. And we're seeing the effects of that right now as you have declining magenta and a rise in the white over magenta, and we know that that doesn't bode well from a continuation standpoint. We did get the dip of orange below with rising DOC red and green, so there's some forces at odds with each other at this particular stage, so we may see a bit more of the wild swings. This definitely has a negative bias. Now, of course, the day isn't over, so that can change dramatically within the day, but as long as it's leading, that's going to put downside pressure. We can look at the intraday 50K chart in a little bit and determine short-term wise how best to read that. From an NQ standpoint, much stronger. So completely divergent to what's happening on the S&P, but then again, the NASDAQ suffered a bit more of an exacerbated negative move than the S&P. So it just sort of evens things out, but again, also relative to the DOC readings, pretty strong. Also P2 setup, which generating, so the MBI on the ES, and now on the NQ you have a GAM. So both of those positive, but below that 50% with the rejection on the S&P, it is possible that we could see a reversal of the magenta and red here. One thing I like to point out is when I see red rising above magenta below that 50%, those rallies tend not to last. So that's an interesting observation. From a daily, obviously, you can have huge swings intraday that still provide plenty of opportunities overall. Euro, again, this a lot has to do with the also faux energy crisis as battle lines, are going to be drawn within the EU, particularly since everyone knows the supplies are limited. It's a confluence of multiple events. Russia reducing, flows. You have obviously the inter-battle between European countries and that. The euro has actually held up quite well. It's only going to be more exacerbated because as the euro falls to the dollar, it makes those energy prices even higher since they're based in US dollars. So that's also an interesting one. And of course, we talked about the fill of the positive extremes from that little setup right here. And oil shot right back up to it. And again, we can see that from the MBI reading here that's still long setup overall. And again, this is going to put pressure on everything, including U.S. interest rates and that, whether the Fed agrees or not, because you're already seeing the market reacting to it. TLT here, Treasury's falling, and what that does is it just says that interest rates in the real world are decoupling from what the Fed is actually doing, and that's an interesting scenario because it just says that what are the tools the Fed is going to use the next time if they're not having an impact with what they're doing as it is. And of course, this was hilarious too. I've just read a wonderful article where Zero Hedge was talking about how Bitcoin has now become the new gold leverage. Well, it's like, how long have we been talking about that? For the last year plus. And it's been evident because they're going to use that as their alternative gold inflation, because gold has been relatively muted, which is why I've been showing more of the Bitcoin, because that is the counter-inflationary trade, and we can see how it was affected within the original sell-offs where margin and that was going, and then as soon as that was stabilized at the base, Bitcoin took off, and that is just that relative hedge. It's like, okay, if markets are getting risky to the point of outside their standard deviations, which is something I talked about happened, that's exactly when Bitcoin started to move, because it's like, well, if you're going to be outside standard deviations, you might as well trade a vehicle that is outside standard deviations and certainly has more upside protection against inflation, that kind of situation. So not surprising at all, and exactly why we cover it. Well, intraday, from a 5K, let's look at the 50K first while we're at it. So we had the SP, MBI, and the GAM both bought within the turnaround setup, and the SP, in this case, sold out. The GAM is still active from this scenario. It's only sold one of the two setups right there, and of course, your stats won't reveal this, but I'll show what I've got for mine, depending on how your charts read. Made a couple of adjustments to the SP buy setup in that, moving the win rates in that, getting them closer to really excellent status, and just it smooths out the equity line. I also have another program that's working, adding in the extra short setup with the orange dots, getting closer with that one by the day. It just would allow for secondary inputs where we have the beginning of orange dots within a set criteria, but you can see we had the white spike to short here as far as moving above the red, where we were dipping below the 33 levels, and that's when it began. The rollover of the long algo, pretty clear right there, and then each one of those steps moving above the blue, and then eventually moving over orange with the white, suggested that you would see further declines going into it, and that's exactly what's being presented right now. And of course, is this anything outside normal? No, because positive extreme still says 43.57 to fill all the way, at least from a secondary node. 43.77, very reasonable. That would be right at the 61% range. So plenty of options within there. So if we move to the intraday chart, we can see that we moved across a series of algo levels. We also had just a bunch of positive extremes as soon as this began its takeoff. And then it just pretty much started slowing down, and then the peak orange dots, and of course the orange dots just representing the move above 12 in this case of orange from a spike, but then needs to correspond to breakdown of the MBI readings as well, and also incorporates DOC white and red relationship. But even starting from there, from 44.19, the reason the earlier ones are less valid, and even the beginning setup here a little bit less so, is magenta shakeout riding well above not just 15 but above 25 range. So this was all within a bullish characteristic going through there, and adding some of those things into it, which will eliminate furthers of the dots and uptrend moves. That doesn't change the fact that sometimes when these come in, you're still going to get 4 or 5 point move, but we want a little bit more consistency so that you're not confused by when those appear, what's exactly taking place. We want more towards the peaks, and of course, right at the peaks, then the yellow dots came in after the white MBI spike, and that was just a matter of waiting for it to just do its thing. And the question was, well, where will the 0% be when it finally rises, and how much continuation from there? And it took a little bit of while waiting. I mean, it's like a couple little bars. It just was very slow. And then once it reached there, cascading back to the 44, which was positive extreme setup from right here, right on this bar right there, and still a couple of other ones going back to the range just below it, which also got filled, and then the next setup was all the way back here, relatively same area, and that's exactly where supported slightly. The problem was we kept producing more white MBI spikes, even going through once it got cleared off, and that's why you're seeing the continued weakness right now into the pre-market with that 43.77, which interestingly enough is exactly what I just mentioned on the 50K. So when you have that kind of congruence, pretty strong effect as far as that goes. Clean action. I don't think there's anything we can complain about any of it. It's just all fitting in beautifully with it, and I'm making the adjustments to the strategies that will then be converted into the paint bar, so the paint bar will match more of what the strategies are doing, particularly now when you're seeing like on that 50K where we're over 58% range from a win rate. Very effective, and I think from a short side, even being at the 50% level is excellent, simply because there's been extraordinarily strong market. We would expect that to even out trade-wise and everything else when I add in a couple of the extra results. In fact, I can show you on my other setup chart real quick what that looks like. So this is my working chart that from a 50K standpoint. The trade is a ORX, so it's just the orange crossing above, and it shows up in that space. But what we produce from it is, and it still needs a lot of adjustment within its current setup, produces a lower actual profit total, not changing the overall number of trades all that much, but certainly improving long setups, which ideally, that moves into the 62% range, and that just skyrockets the profit factor when you do that. And it will certainly improve on the short side because, again, I have to make some adjustments with the stop setups on it, but wildly effective within that, and it certainly just it narrows dramatically dip moves within the overall setup, and certainly very clean from a monthly standpoint, which I think is ideal because that's exactly how you would measure your normal growth from the thing. But the idea being is that when you have that spike of the orange along with at least a pivot higher of the NBI, white over 25 range, it then begins a counter that then says, as long as I get the execution of the short setups, we'll go ahead and make that move, particularly in those cases where I don't have gold shakeout rising. And also we've looked at making the adjustments. I made an input setup within this that allows for changes with how high the shakeout magenta and that can be before it's just like in one of those power modes. So this will just be another adjunct that will add a little bit extra to it, and it's just a matter of refining what the best exit setup is, because sometimes waiting for the full buy turnaround is just, I think, a little bit late when we're probably going to be able to capture the turnaround setups when usually it's that yellow over magenta and you have a building of particularly after even a P2. So it may even be one where I'm working on both setups where this initial dip, we know that we're going to get that pop, and that secondary dip may be the one where I want to try and get it to transfer over. I'll just compare the results on both, but either way you're going to get the most effective setup that we can develop within what we see as typical patterns based on our NBI readings and that, because these are all pretty consistent. It's going to repeat the exact same things over and over again, which is what you really want to see, because you want to have that consistency, know when the divergences are taking place and how to be able to adapt to them. Because, for instance, you'll see a spike of the white like this, starts to look good, the white makes the sudden dip, and then you get the immediate reversal. Fortunately, oftentimes price usually remains in a pretty steady thing, allowing for the conversion back to the upside when that takes place, and then being able to take it from alongside. And that's exactly what is being read right here when it flipped into it. And ironically, the SP and then the GAM coming right after each other, very similar in that, and that's exactly kind of what we're seeing in the most recent trade. The difference is you're thinking, well, why not trade them out at the exact same time when we look at the chart? And the justification in that one being is having those different exits is like a variable time basket, where it's going to result in slightly different configurations. They give you an opportunity to make up for any, I don't want to say system error, but in just market volatility, where the range of bars may impact the actual success in that, because having a dip like this is not unexpected, filling in positive extremes, and it can turn around just as quickly right back to the peaks as well. So having exited it at the peak, yes, you could do that if you're able to capture the return, but oftentimes those returns are just large single bars that make it ineffective. As always, though, I will continue to update you and keep sliding into the Skype chat the downloads for the updates on it. Trade well, and we'll talk to you later.